Good afternoon. Welcome into Market Talk for this Wednesday, April 13th. Great to have you with us. Thanks for making us part of your day once again. I'm your host, Jesse Allen. Find us online, markettalkag.com, our home on the web, markettalkag.com. That's where you can find us, all of our streaming sources, all of our radio affiliates, radio partners, all of our links to find us on social media, our YouTube channel, latest news of agriculture, everything online, markettalkag.com. Well, we saw the market trade today. We were a little bit back and forth. We started lower, ended up back higher in the grains for the most part. We got plenty to discuss here. Let's bring in our good friend Mike Zuzolo with Global Commodity Analytics joining us this afternoon. Mike, good afternoon to you, sir. And looking at that trade today, we started with a weaker tone, but we were able to recover nicely here throughout the session and finish mostly higher in the grain and oilseed trade today.
Yeah, that's a really great way to frame it, Jesse, because what we noticed by the close of the trade on Wednesday was that our good old, strong, broad back, broad shoulders leaders were back in charge. That was the wheat and the crude oil market. And that really said a lot to me because we saw, for instance, December corn go down to around 725 and test its support, find that support, and was able to get up to the best level since December of 2012 as we cleared 737.5, I think, was the high in the December on Wednesday's trade. And I think this goes back to the CPI, Consumer Price Index, and the Producer Price Index released today, CPI released on Tuesday, both of them showing that this inflationary pressure is not going away. It's looking more and more like it's going to be an endemic inflationary pressure that is going to be drilled and driven continuously by the energies and by the food. Beef did have a pullback in the producer prices versus the month of February, a substantial pullback. I believe it was around 7%, which is really nice because that really gives you some cheaper values, more reasonable values heading into the summer grilling season. But other than that, the food prices were up a little over 2% versus the prior month of February. So I think we're seeing now the situation develop where the trade is realizing that interest rates are going to go higher. The bond yields have already priced that in. And I think, quite honestly, the bond yields have already priced in some of these inflationary numbers, and they feel pretty satisfied with themselves. And I say that because I noticed the bond yields took a big dip to the downside on Wednesday, and the dollar then took a big dip to the downside. And I think those were probably the two biggest issues in the macro markets that allowed the crude oil and the wheat to find some more investor-led support, I would suspect.
Well, Mike, I want to dive more into inflation because it seems like that has kind of caught the headlines here this week outside of the other fundamentals and factors in the market. And I'll pull up this chart on the video feed. This is a U.S. inflation chart you shared with me. Can you walk us through this and talk a little bit more just about this inflation scenario we're seeing right now?
Yeah, this is we've got two charts for the viewer here this week, and this is the first one, and it's really sets a really nice tone for what we're dealing with in the United States and in Europe and in Russia and in other major countries, excluding one big country that we'll get to here in a second. But the pink line is the producer prices year over year. We're up at 11.2% now, the biggest jump. And notice that pink line only goes back to about 2010. That's when the U.S. government refigured producer prices. And so this is the producer prices as we measure it today. You can go back and do a standardized PPI. And if you do that, then you go back into the 1980, 1981 time period for where we're sitting on producer prices, kind of what we're dealing with in the consumer prices, being the black line. Consumer prices index year over year up there at around that 8.5%. And what's interesting about this line, these two lines, Jesse, is notice the near vertical ascent of these two inflation indicators, that they really haven't paused. We've had a couple pauses in the producer prices, but the consumer prices have not paused at all. They continue to go sharply higher. This is a big issue because that means that the inflation expectations that drive consumption will keep demand strong enough historically that people will think, well, things are just going to get more and more expensive, so I better buy them now, and I better buy them now the next month because it's just going to get more and more expensive. So what I'm looking at in this chart, or looking for in this chart, I should say, is a flattening out of these lines. That's where the inflation expectations maybe will peak in the consumer out there, as well as the investor, the trader out there looking at inflation and commodities would say, okay, maybe we've peaked now and we found a level of containment where the inflation can't go much higher, and then they can go back to their normal buying, normal investing pattern.
Well, you left one country out, as you mentioned earlier. So we'll flip charts and talk about China now. Obviously, China, a major player in world, and we talk about China a lot here when you and I get together to discuss things. So talk about Chinese inflation and how that compares with U.S. inflation.
Yeah, this is a big deal right now because this Chinese economy, when you see a negative food CPI, consumer price index, year over year, when you see that pork prices, which make up a massive chunk of that food CPI, is at its lowest prices since 2019, you get a picture, and then you throw on top of that of the PPI year over year actually falling substantially the last 3 months by almost 5 percentage points. You get a really good, clear picture of how bad COVID must be in that country in terms of their zero COVID policy. And Jesse, this chart really does kind of scream out to me a deflationary pattern and a really weak economy in China. Now, that's going to be negative for the commodities eventually, but in the short term, China's central bank has already said this week that they're going to start pumping and priming the pump and pumping out money, and in terms of lending, and just throw liquidity into the market to try and reverse the trend that we've started to see here in their inflation, in their economy, because of this policy of COVID lockdowns. And so whenever you see typically China jump in like that and the People's Bank of China start printing money again, that usually increases commodity investment by the investors, especially hedge funds, managed money funds, in my opinion. And just to give you a raw statistic, March imports coming into China that they buy from other countries, that was released Tuesday night. It actually fell. It actually went negative for the month of March. And just to give you an idea, the January and February number combined was up 15.5%. So you can say that the March imports that China took in were down 15% from the prior 2 months, and a little bit more, in fact. And I think this really does speak volumes about the soybeans and the soybean meal, and why the hog prices are at 2019 lows. Crush margins are starting to go back down towards 6-month lows because of these high soybean prices around the world. So China is going to be, like we've talked about, I think, a real issue on the demand side. It's going to be a disappointing demand side of the equation eventually. And so we're going to need more and more supply bullishness. But in the short term, between what we're seeing in the U.S. inflation and the Chinese deflation, this should help create an environment. And this is the major point of these two charts. These two charts should create an environment now where the dollar actually goes down and bonds actually recover, and bond yields go down with the dollar. So that's what I'm really going to be watching for. And if that can happen, then we can stabilize these prices and not have to have as big a sell-off maybe.
Yeah, it'll be interesting to see if that happens. I'm hearing quite a bit of chatter about some people saying inflation has peaked, but to your point, it's going to take these factors coming together to really maybe start to see that here with some of these prices, because I don't think we're completely out of the woods yet. I think, to your point, it's going to take some of these things to come together, Mike.
I can tell you why I think you're right on the money, and we never talk before we go on the air, but I can tell you why I think you're right on the money. It's because the market right now in Ukraine is missing the point that if you don't have diesel fuel to be able to plant the new crop corn and new crop oil seeds and whatever you're going to plant this spring, and it's been found out that 80 to 90% of the diesel fuel has not been booked by farmers in Ukraine, and they're living day to day by the government getting them diesel day to day. All of a sudden, if the diesel and the fuel prices go higher and become even tighter in supply over there, that's going to roll back into the food prices, and it's going to roll back into the wheat and the corn prices. I've heard all week this week that the corn in Ukraine is going down in value because there's no way to get it exported. Well, that could be very, very quickly in the next couple, 3 weeks that the trade realizes that because of the high diesel prices and because of the war getting worse again, unfortunately, I think that's going to happen, especially in the East and in the Northeast. All of a sudden, these acres aren't going to get planted. Well, then what happens? All that corn that's in the bin becomes that much more precious, and they don't want to export it at that stage. And I think this is where we're at right now with the inflation, because it's mostly energy related, because it's a cost push inflation that's mainly energy related, and we're dealing with a massive energy related part of the world. It doesn't seem like to me it's cooling down. We need peace to break out. If you want to peak inflation, Jesse, you need peace to break out at this point.
Well, and if peace does not break out, it's going to put a bigger emphasis on our crops here in the US this year and growing a rather large crop to try and make up the difference. Same with South America. But talking weather here in the US, uh, let's talk precipitation outlook. And you sent me this as well. You shared this, I know, today. Uh, I mean, we think about what we are seeing here heading into the heart of spring planting season. Walk us through what you're seeing with just this precipitation outlook and just some of the general things you're hearing, especially some of that severe drought in the southwestern plains right now.
Yeah, this is where I think, again, we are really on track for a 2008 market. When I see what I just saw in the Corn Belt this past week and weekend, when I took a trip all the way back to near Lake Erie, back towards Fort Wayne, the Indiana-Ohio border, and came back across to Atchison after having gone down to St. Louis and across southern Illinois. This and I did another media show with a colleague of ours who's in Garden City, Kansas, and he was just in Goodland, Kansas, and he saw that literally chisel plows were out tilling under hard red wheat. And so where the blue dot is Hutchinson, Kansas. And that's kind of the go, no go gauge, in my opinion, of where the good wheat is. And, you go to Hutchinson and it starts to drop off very, very fast. You go west and south of Hutchinson, it gets really, really tough. You go east and north of in a southeast, like towards Wichita, which is Sedgwick County, one of the top 3 wheat producers for the state of Kansas. It's pretty good wheat right now, but I think you've got about 50 to 60% of the wheat by production that is in dire situation. And when I first moved out here about 9 years ago now, I was told pretty bluntly that April makes the wheat crop out here in this part of the country as far as the hard red wheat crop. And it's just not looking good at this point. So I still am on track for a 45 bushel yield versus USDA's 49 plus, just because of this chart. Now, flipping back to this trip that I just took, it is extremely saturated from St. Louis to Indianapolis. I mean, I was very surprised at how bad it was. It dries out quickly as you get north of Indianapolis and as you get to Champaign, Illinois, and Springfield, Illinois. And then it gets very, very dry again as you get to Hannibal, Missouri. But that map right there is almost a necessity at this point for guys to be able to get planted in a timely manner. It doesn't mean they can't have a good crop, because 2019 they planted corn into early June and had mostly very good yields. But it does put pressure on this price action, and I think that's why the December corn has been able to rally so much better than the May corn this past week.
Well, and we'll flip charts as well and look at the temperature outlook. And on to your point as well, you look as well, we're getting 2 feet of snow in the northern plains right now. So that's also going to affect things for the spring wheat crop. And it's going to push us back a little bit there, but it will help the moisture outlook, hopefully, when some of that melts into the ground, Mike. But looking as well at the temperature side of things, walk us through this chart and how you're reading this and what you're seeing here.
Yeah, and this is an interesting chart, because a map, I should say, because right now we've got freeze warnings west of that blue dot. We've got freeze warnings for tonight. We were 84 degrees in Atchison yesterday at this time, Jesse, and we're probably 44 right now. And we've seen snow flurries this morning or this afternoon, so we're probably even colder than that. But the wind chill is creating it. But my point being is that we are looking at 23 to 26 degree temperatures west of where that blue dot is in central and western Kansas, all the way into northern, southwestern, Nebraska, northwestern Kansas. And so the areas that are the driest are going to get the coldest. And then when the pattern shifts to warmer, they're going to heat up the fastest. And that's what droughts do, because there's no moisture in the ground as an insulating blanket when it's cold. And there's nothing there in terms of evaporation potential to keep the air temperatures down. And so, I mean, I'm just going to say it. If we can't change this pattern by the end of April and we go into May like this, unless we have an uncommonly cool summer, I don't know if we'll have seen a drought and a problem in this part of the country like we could see this summer, maybe a generation or two. So this is why I still think that it's a wheat-led market. It's still very much like 2008, especially if Chicago sees Illinois, Iowa, Indiana, and Ohio get planting and not get caught behind too much.
Mike, I should ask you as well, just your general thoughts on President Biden's E15 announcement for summer. It didn't really seem like it had much of an impact on the corn market here yesterday or today. But what are your thoughts seeing that? And then also, I know we got our weekly ethanol report this week. Just what are your general thoughts there?
Yeah, the E15 announcement really surprised me in a good way. I really was worried about food versus fuel coming down the pike, and the Washington policymakers and the European policymakers throwing up food against fuel. In other words, biofuels against being able to feed cattle and feed livestock, and really come out against, swinging against the biofuel mandate. This tells me, to our earlier point, Jesse, just how bad this inflation is and how maybe longer lasting it could go. And this goes back to the Treasury Secretary. Again, something I've never seen in my adult career. The Treasury Secretary is going to have a special meeting, I think it's just next week, on the food crisis. And so this is getting so much attention to the point where the Washington policymakers really can't put it. It's Ukraine's number one, and then this food issue is a close number two, and the food energy issue, I should say. So this E15 announcement is good news from a standpoint of, I was worried that ethanol plants would drop their basis if the policymakers turned against ethanol. Now it's probably the opposite, where the ethanol basis could be some of the best we've seen in a long, long time if they sign this paperwork, they being the EPA, in June. That's a key point, is that they're not going to do it until about June, right when it would start to take effect. So they could easily pull back on this whole thing if gas prices and energy prices would cool off, but I just don't see that quite yet.
Mike, let's flip over to livestock. Cattle country getting some activity here today and yesterday. Cattle futures looking fairly well, held up fairly well as grains turned around on Wednesday. And you alluded to some of the inflationary things with beef, with the PPI and the CPI earlier in the show. Talk about what you're seeing in these cattle markets here today.
I think last week when we spoke, we talked about maybe me thinking that we'd be closer to 130 versus 140 for cash fats. And so that's happened. So with the analysis on track, I think the June could pull out another $3 to $5 upside, Jesse, when it comes to the cash market. And I say that because not only did the PPI number bring down the beef prices, but I've also seen some really good feature prices for pork this past week and 2 weeks, in fact. And so I think we're really chewing through the supplies very quickly. And cattle weights, I think, dropped another 3 pounds last week. And I would look for them to continue to drop because of those maps you and I just looked at. I mean, that's right in the middle of feedlot country, Garden City, Hutchinson, those areas. If they stay hot and dry and the corn's $8, which it is now, they're just going to keep dropping weights. And so I think June still got $3 to $5. I would probably put another $3 to $5 on top of that in the August fat cattle market, as long as the feeder cattle doesn't get beat up by a strengthening corn market. And I think the window of opportunity for funds to buy corn and sell feeders is probably closing at this point, because the supply of the cattle are going to start dropping as we get into August, September.
Another thing on the supply of cattle as well, we have to wait and see with this major snowstorm in the northern plains. It's calving season. We hope there's not many losses, but the loss potential is there, Mike.
Yeah, you bring up a really good point, because a lot of my cattlemen, I did not realize this till about 2 years ago, but a lot of my cattlemen are stringing out their calving operations to where they go into March and April, whereas opposed it was usually peaking by mid-February. And so they do different AI programs. I think that's a really valid point. And I think it brings to point to me, as you say that, Jesse, that maybe the northern cash cattle market becomes a player in the coming weeks. So we need to be watching for that.
Hog market, real quick. Any thoughts there? I know that April contract, we're spreading a little bit here, just that contract nearing expiration.
Just a great, well balanced market, but I don't think we have a ton of downside. I think the funds will want to take profit if the beans slide. And so that's my biggest fear about the hog market. Not so much the fundamentals, but the funds at this point.
Mike, any other final thoughts you have for us on this Wednesday before we run out of time?
Just continuing to talk about some of these new things that I'm working on when it comes to like the energy side in the Ukraine and planting and what that could mean to the crop prices. Chicago is looking for maybe a pullback in these prices after Easter if the weather pattern shows a drying out east of the Mississippi River, Jesse. So maybe that would be something to be on the lookout for. We'll see if the wheat lets that happen or not. Otherwise, go to globalcomresearch.com and sign up for a 3-month subscription.
I was going to say, you got that trial on the website. A lot of great analysis. Globalcomresearch.com. Globalcom with 2 M's, research.com. With that, Mike Zuzolo with Global Commodity Analytics. Appreciate the time on this Wednesday, sir. Have a great week, and we'll talk to you next week.
Great to be with you, Jesse. Have a great week, too.
And that is going to do it for Market Talk on this Wednesday, April 13th. We appreciate you joining us here. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.